Hey everybody, welcome back to my YouTube channel. So today we're going to be talking about the difference between the 1 minute and the 5 minute chart and when it's best to trade off the 5 minute chart compared to the 1 minute chart. So with that being said, we're going to just jump right into the charts this morning, get to work, and I'm kind of going to show you the differences and how we can determine whether to use the 5 minute chart or the 1 minute chart. So I hope you like this video. If you like it, give me a thumbs up, leave me a comment. I love interacting with you guys, so definitely leave a comment and I will respond. So with that being said, let's jump right into the charts. Perfect. All right, so we're actually gonna start today. I wanna just do a nice quick little video. So let's just start on the 1 hour time frame. Now, we can see the market moved higher, taking out these relative equal highs, trading into that weekly fair value gap level again. We had an opening range gap this morning, which we ended up filling in and trading down into previous week's new week opening gaps. So I'm going to talk about this run, essentially why I was looking at the 5 minute comparative to the 1 minute, and essentially, yeah, what was going through my head. So let's jump down to the 15. Again, when we're talking about higher time frames, it's always good to look at the higher time frames as more of a kind of like we want to see the higher time frames in confluence with our analysis. So even right here, we actually traded down, having this really nice displacement run at 9:30, leaving behind this 15-minute fair value gap. So we had this nice displacement run down after taking out those relative equal highs, after trading into that weekly fair value gap. So we know that we traded into a higher time frame objective. So we traded up after this displacement run, we traded higher into this 15-minute fair value gap. So I'm going to drop down to the 5 minute time frame now. All right. So let's look right here. We have this break of market structure right here. We have this break of market structure right here with this displacement run. This is actually a really nice displacement run. So I'm going to mark out this 5 minute fair value gap. Now you can see we actually moved a little bit lower before ultimately trading into this 5 minute fair value gap. But the good news is we were leaving these lows intact and we still had opening range gap to fill. Plus, if we're aiming for this new week opening gap down here, we still have quite a run to go. So sometimes waiting for that pullback is essential. Don't try to get in this move because usually the market likes to come back and trade into these fair value gaps. Plus, we're also taking out this short-term high, so that is a short-term sell-side liquidity. I'm actually going to mark this out so it's a little bit easier to see. Or buy side liquidity. Short-term buy side liquidity, and let's put that on the top. Perfect. So we can see like the market action, how it's playing out, way more confluent on the higher time frames, so the 15-minute and the 5 minute. Now when we go down to the 1 minute, I will kind of keep these levels intact and I'll show you what I mean, what the difference is between the 5 minute and the 1 minute time frame. So days like today, I really like looking at the 5 minute time frame just because we do see like the price action much more clearly, especially if we're kind of in a consolidation range right now throughout the week. We're kind of been up and down all week. So if we were in a trending market, I really like to take trades on the 1 minute time frame just because, you know, we're always going higher. We're pushing. So I find like the 1 minute time frame is really good for trending markets. But when we're kind of in this consolidation, we like trading on the 5 minute time frame. And again, we can see here, like we had that displacement run, breaking this market structure, coming back up into this 5 minute fair value gap, which is also the 15-minute fair value gap, respecting these levels and then moving lower. So 1 minute time frame. Now here's where it can get kind of confusing because let's say your bias is buy side liquidity, right? You want to see that move higher, But on the 1 minute time frame, we kind of see, hey, we took out these this liquidity here, traded down. Now we have this displacement run higher, breaking market structure. Okay, we want to see it go higher. Whereas on the higher time frame, on that 15-minute, 5-minute, and that 1 hour time frame, we can see like, hey, we actually traded already, taking out the relative equal highs with this run right here, trading into that weekly fair value gap. We had this is our displacement move lower. We have our 15-minute fair value gap up here and our 5-minute fair value gap up here. And this is something we want to be trading back into, using this as short-term buy-side liquidity and this as a break in market structure. So it can kind of get confusing on the 1 minute, because here it's like, oh, we have a displacement run higher. We traded down into this 1 minute fair value gap. I want to see the market move higher. And for sure, like, it could work. It did move, 4 points. That's still a nice little run there. But when we're aiming for like a fill of that opening range gap, or even just coming down to these new week opening gap levels, we can see much more clearly on the 5-minute time frame how that trade would play out comparative to this one. Because even, okay, we take out the short-term buy-side liquidity, now we're looking for that retracement, which we don't actually get. We can see that market has already moved. Yes, we continue to move lower, but we don't get a retracement into this 1 minute fair value gap or this one. We do finally get one into this one, but look at how long it takes for the market to actually decide, hey, I'm gonna move lower now. So when we're taking trades on the 5 minute, we can see much more clearly, hey, there's this displacement run. We have that break in market structure. We came back up into the 5-minute fair value gap, short-term buy-side liquidity, boom. That would have been the entry, So using the 5-minute and the 1 minute interchangeably is important. I always find when we're looking at higher time frames, we want to kind of go with that, not always just on the 1 minute time frame. So don't forget to add the 5-minute and the 15-minute time frame to your trading, because it is essential. It helps with determining bias. And even on the 5-minute, I take trades on the 5-minute time frame all the time. We can get into a pretty awesome trade on the 5-minute time frame. So don't be too concerned with taking trades on the 5-minute time frame, because hey, you know what? It happens. Look at this. This is a beautiful setup. Traded down, taking out that short-term buy-side liquidity, and then into this 5-minute fair value gap before trading lower. Displacement run, liquidity, entry fair value gap, boom, our drawn liquidity, which is that fill of the opening range gap and this new week opening gap. So I hope you guys learned something. Again, if you like this video, let me know. Leave a thumbs up, leave a comment. I love interacting with you guys, and I love hearing your stories. I love the tips you give me. So please let me know in the comments what you think. What are some things you're struggling with? And yeah, let's just connect. All right, guys, have an amazing day. I will see you all tomorrow. Bye for now.